What's going on, everybody? Welcome to a Capital Hungry Market Update and Trade Ideas webinar. So basically, over the next 30 to 40 minutes, I'm going to be going over some analysis and trade ideas from my perspective on gold, GJ, GBPUSD, EURUSD, USDCAD, and US30, while also looking at economic events and fundamental catalysts currently impacting the markets for some intraday, day trade, and scalp trade ideas. In terms of economic events, at 8:05 a.m. Eastern, we have the Bank of England Governor Bailey speaking, which will be impacting GBP. At 8:30 a.m. Eastern, we have US building permits, which will be impacting the US dollar, US equities, and gold. And then during the Asian session tomorrow at 9:30 p.m. Eastern, the People's Bank of China loan prime rate, which will be impacting market sentiment through the Asian session hours. In terms of recent fundamental catalysts in focus that we are looking to play to our advantage, we can see even though the US dollar has been very bullish over the last month, as investors have been pricing in the potential tapering to come by the Feds, as we peaked and reached a weekly high area, as well as failed to break above 94.5, we can see the US dollar is in pullback structure and short-term bearish. So as the US dollar is the world reserve currency and holds so much strength regardless of what currency pair we are trading it in, it is always good to understand that market sentiment bias, and on the short term, we are looking to play US dollar weakness. We can also see that the US vaccine mandate from the federal level is potentially disrupting the labor force rebound, so the tapering process may not be as soon as we thought it is. But overall, macro optimism is still intact. We can confirm this as the Japanese yen has been bearish, volatility index is bearish in relation to the US equities fear and stock market short selling still not being relevant. And global equities and global stock markets are still bullish across the board. So primary investor sentiment is more on the optimistic side, with more equity still being pooled into our equity markets and coming out of our safe haven currencies or safe havens, like for example, Japanese yen, dollar in the short term, and VIX still being flat. Something to note out for, we do have the EU Leaders Summit this week, which is going on throughout the week. So something just to keep in mind as we continue to watch other economic reports and data. Okay, let's start here with GBP JPY. So if you guys have been following along the Monday market update webinars, as well as any of our live streams, you can understand with our risk currency baskets, GBP, AUD, NZD, CAD, Euro holding more strength with that overall optimistic sentiment, and Japanese yen being extremely bearish, plus having the Bank of England last weekend give some potential signals at interest rate hikes to come in the near future, we have respected this demand zone at 149 while also maintaining overall bullish market structure. So that is why primarily ever since the start of the pandemic, since we hit those crash lows, I have only been looking for GBP JPY buys, pullback to retest better demand zone buys, breakout of consolidation zone, or previous high buys. So when we're looking at the market structure, you can see this last high printed, we had a much longer and aggressive pullback phase that almost lasted a few months, still failing to break this demand zone, with a lot of buy orders being collected here on the higher time frame from an institutional perspective. And then with the new quarterly period, we can see the new quarterly candle when it opened up to start Q4 spike down to this demand zone low again. The same time Japanese yen is very bearish, collected a lot of buy orders from that strong 149 demand zone, which if you also backtest from the 2013-2014 period, exact same price points of reaction in terms of institutional order flow. And then we started to make our way to the upside, breaking above these levels and finally reaching previous highs as a target and breaking into new highs. So on the higher time frame for months, I've been bullish, and hopefully you guys have been as well, as you've been following the Monday market updates, scalping sessions, where I do analysis webinars and so forth. So no need to flip out of that bias yet. we can see very strong bullish price action on the daily time frame, but what I would prefer is a little bit of a pullback, but it doesn't look like we're going to be getting any aggressive pullback so far. So all we've seen GJ do is upside move, pullbacks, and continuations to the upside, with, as we are peaking a high here, potentially entering a bit of a pullback phase. So all we are looking to identify, as long as UK equity markets stay hot, the Japanese yen stays bearish, and bullish market structure stays intact on GJ, are pullback retest buy areas and continuation to the upside buy areas. So when we're coming to look at our equity markets, very clear to see UK 100, FTSE 100, still sitting around all-time highs, and on the intraday bullish, shows me that there's still strong investor confidence in UK's economic rebound and overall recovery, as well as in the UK markets. Japanese yen across time frames still very aggressively bearish, continuously going to print new lows. Now, as long as the Japanese yen stays bearish as the standalone safe haven currency, equity markets stay hot, what I'm essentially going to be looking for here on GJ are these trade ideas. I'm marking out this potential bearish corrective structure as we are watching it now. 156.8 is going to be a make or break decision point for me. And I'll show you guys exactly why, just in case we do not break this intraday demand zone. Okay, if we still hold above this double bottom price point where we printed new highs here, had this double bottom and failed to break 156.800 ppl, if the new daily candle still holds this zone and doesn't break below, high risk, high reward buys looking to scale up accordingly at 157, 157.2, and 157.5. But what we have to look to anticipate is that even though we are in a bullish bias on GJ, the market moves in waves and moves in phases. We have to be cautious that it's not out of the ordinary for GJ to have some aggressive intraday pullbacks to collect buy orders from better demanded price points before continuing in the overall trend. Because we can only move up in two fashions when you're looking at market structure. You either have buyers extend from a demanded price point low, extend up to a supply zone or to a higher high point. Technically, they profit take and exit the market. Sellers jump in hand to relieve them out of the market. You come down to a more favorable demanded price point and collect more buy orders before continuing up, creating these market waves of higher highs, higher lows, and continuations. Or you have an impulsive move to the upside, consolidation zone, technically, which I see as order flow collection and a break of the consolidation and continuation up. For example, here you get a pullback continuation. Here you get more of a consolidation zone break continuation, right? Regardless what time frame it is, regardless what currency pair, stock market, that is the general easiest way to observe market structure, whether bullish or bearish, and understanding the order flow behind the scenes. So what I want to identify here on GJ is we can either do two things. We can either have this pullback structure, come down and fail to break, and start making our way back to the upside if we break these highs. Or GJ could very much well even push up back to these highs, but consolidate for a period of days before having the breakout to the upside. So again, these are the trade ideas I'm going to be looking for through Asian session overnight, as well as London session in New York tomorrow, primarily being on the bullish bias, but playing some potential short-term sells if we break below 156.75. And this will still be to set up potentially better risk versus reward buys. Safest buys would be above previous highs. So easiest option one and pathway of price would be we come down to these lows at the new daily candle, fail to break, and continue our way back bullish above the PPLs, with the safest buys being above the current highs printed. If we do not hold above 157 and break below these current intraday lows, then I can see some short-term sells just to set up better risk versus reward buys as we identify GJ entering pullback structure. So main bias on GJ, higher time frame, fundamentally, technically, is bullish. I've mainly only been playing the buys as well. I'm looking for pullback buys, continuation breakout buys at those levels. I'd only be looking for short-term sells if we break below these candle body price points, validate a potential higher potential for a pullback, and then look for deeper pullback buys after we get a bit of a 50% correction of this impulsive rally we had from last week. Okay, so that's very easy to understand. UK equity market's still hot. We don't really have anything that's bringing negativity to UK's economic rebound for the time being. Japanese yen is still bearish as well. Now, when we're looking at our US dollar pairs for analysis, GBP USD, EURUSD, USDCAD, the easiest thing to do is understand the correlation of the dollar as the world's reserve currency and how much strength it holds. So right now, what we're identifying on the US dollar is, and when you look at the movement of the US dollar, you can see that it's not out of the ordinary that, yes, the dollar has been trending bullish with the fundamental confirms of the Feds potentially starting to taper stimulus support. But the market moves in waves, and you can see when you have these highs printed, you do have these pullback phases that could extend for a period of weeks long at a time, and you have to understand that accordingly. So as we had the dollar print new intraday highs and still overall trending bullish, we have to still understand that we are potentially in a bearish pullback phase that we want to understand and play accordingly when you're looking at the overall market structure. So when I'm looking at US dollar, I'm going to be looking at this 93.7 area, 93.5 and 93. If the US dollar doesn't break above these rejection points and makes its way down and breaks this intraday low and comes back below the previous high, then we can anticipate deeper dollar movement to 93 flat, for example. If we have this downside move, even coming down to the previous high and to 93 flat, it's going to be very easy to anticipate USDCAD sells, GBPUSD pullback buys from its lows, EURUSD buys, and so forth. Because I'm going to show you guys something. The same time US dollar is rejecting intraday highs, doing a technical double top, which just shows us buyers exiting the market, sell orders being collected at this price point, and the same time the dollar is in a bearish pullback phase, you're going to see that a pair like GBPUSD is in a pullback phase from low points. And you can see the way GBPUSD trends bearish, or the way EURUSD trends bearish, is the inverse movement of the dollar. So GBPUSD could still make its way all the way up to 1.38 before continuing bearish to revisit these lows. We're going to anticipate the length of the GBPUSD bullish pullback by understanding the correlation and short-term weakness in the US dollar. So when we zoom in more here, if we can see the US dollar spike up a bit for the new daily candle, but turn bearish, break these lows as well and continue even lower, then this is going to give us confirms for UCAD sells, GU buys, and EURUSD buys. And I'm going to tell you guys those price points now, okay? Bitcoin's still at 60K as well. I just got that alert. But anyways, so here, GBPUSD, the white lines are historical levels of interest, and this is the current pullback structure in the overall zoomed out bearish market structure. So you can see when the dollar is in a pullback phase and you have these lows printed on GU, you can enter a bullish pullback phase that can extend for hundreds of pips and it can extend for weeks on end, right? So right now, GU is in that pullback phase with potentials to come up to 1.38 flat when you're looking at overall market structure. So as long as US dollar stays relatively bearish, on GBPUSD, I'm looking for 1.1367 buys, 1.375 buys and above 1.378 buys. This pathway of price on GBP USD is if dollar stays bearish in the short term and continues its pullback structure. Okay, I would only personally be looking for any GBP USD sells if we can confirm dollar buys back on the scene as the safe haven, as the world reserve currency and a safe haven currency, and if we broke below 1.365 and 1.36. Otherwise, I can see us making our way up to 1.39 before potentially having any high risk, high reward sells. So this is the potential pathway of price I see. Don't mind the trend line. This is just like an older trend line, just a visual representation. I see us coming to retest this price sensitivity of interest here, these areas of interest. Okay, and I only see sells if we either dig up to this area or if we break below 1.365, 1.36. So the red boxes are sell zones for me, and they're only sell zones if you validate dollar strength back into the table. Otherwise, we're currently looking to play this. Sorry, that's supposed to be a green box. Bang, 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 bang. 1.37 area retest buys, break above 1.375 buys, break above 1.378 buys. As long as US dollar stays bearish, UK equity stay hot, and we maintain this current pullback structure from the lows to retest better sell areas in the higher time frame. Okay? So what we're primarily looking to play and take advantage of is current market optimism, dollar index bearish pullback structure from highs. We just needed to break below 93.8, Japanese yen weakness, and equity still being hot. So when we're looking at Euro USD, you can see the same thing. Euro USD at this low has the potential to enter a pullback phase now when you're looking at the overall way it's been trending. This pullback phase can come to at least one to retest 1.17, especially as US dollar continues to be bearish. So even though in the higher time frames we've been playing a Euro USD sell bias, we have to understand that we have new lows being printed. We're starting to get potential support created at these lows for a potential pullback phase here that could extend all the way up to 1.173. All right. So same confirms. We don't have any Euro data to focus on, but we do have the EU Leaders Summit that's going on this week that you're going to have to keep an eye out for your reactive headlines. But overall, dollar still relatively bearish, and we just needed to continue down to come retest 93.2 or 93 flat. Besides UK equities as a representation of Euro stocks, you can see German stock market still very bullish as well. So strong confidence in Euro markets, and just across various regions that market optimism is still stronger. I personally think that macro optimism and bullish strength on the equities is going to squeeze out till the end of the year into the Christmas rally. And these investors who have been riding the stock market buy since the crash, they're going to try to squeeze out as much as they can till the end of this year before we really get tapering or interest rate hike confirms by central banks, and especially through the holiday Christmas rally that's like known as a seasonal thing for stock markets to be a lot more bullish. And then you have a bit of a decline coming into the start of the new year 2022 where you get a pullback for the new yearly setup, right? But anyways, so Euro USD, I'm in a bullish bias in the short term on Euro USD still as well. I'm looking for, even if we get deeper pullbacks to 158, 16, 1.163 buys. Okay, as long as US dollar is still in that bearish pullback structure, EU is in a pullback from its lows. Markets are optimistic. I'm looking for buys. I'm only going to start to look for sells at a retest of around 1.17 flat, or if we broke the current lows. Okay? So now, EURUSD and GBPUSD are very easy to understand because it's almost the inverse movement of the dollar individually, because the US dollar is the world's reserve currency and its money supply was exponentially increased. Okay? I don't care about a support line. I care about the fundamentals of why Japanese yen is bearish rather than if it's going to bounce off a magic support line or not. So you should understand what's actually moving the markets behind the scene. Okay? Now, as GU and EURUSD are doing pullbacks from their lows, the same time Japanese yen is extremely bearish for the fundamental reasons of the markets being more optimistic, because there's an outflow of liquidity in safe haven currencies and an inflow of liquidity in equities, commodities, and other riskier, rewarding investment opportunities for investors. So even if Japanese yen has a pullback from the lows, it's still overall extremely bearish market structure. So why fight that? If a pullback happens, who cares? It's still gonna have sellers come in, continue bearish, as long as VIX is flat and global stock markets are bullish, and we don't have any fundamental fear, uncertainty, or doubt to have investor sentiment shift. If there's no fear, uncertainty, or doubt, why would the Japanese yen turn bullish for no reason? Why would investors want to stop riding the stock market buys? You're thinking too much from your own singular perspective as a retail trader. You're not thinking about how the overall financial markets and the people who move the markets work. You know what I mean? But it's okay. Now, USDCAD has been extremely bearish on the intraday timeframes due to what I like to call a double whammy. What is the double whammy that's been keeping UCAD so much more bearish compared to the US dollar individually? Well, for those of you who understand the fundamental side, there's a strong correlation with Canadian dollar strength in the movement of crude oil. One of Canada's main revenue sources comes from exportation of oil. Crude oil hit $80 a barrel. This means that more revenue is coming in for Canada on each barrel sold of crude oil, right? It only costs Canada about $20 to produce a barrel of oil. So now their profit margins are $60 a barrel on average. Obviously, we don't know all the details and little costs. But anyways, not to blabber on, this means stronger Canadian dollar. So we have this, what I like to call a double whammy, where the US dollar in the short term is showing us some weakness, as the dollar index is in some short-term bearish structure pulling back from highs. And the Canadian dollar is very strong. So you have this double whammy of US dollar short-term weakness as we are pulling back from the highs and temporarily bearish, right? And you also have oil being extremely bullish at $80 a barrel. So on UCAD, we're going to keep it very simple. I'm looking for new daily candle pullback. Even if we come up to 1.244 previous low sells, retest of 2.4 sells, break below 2.3400 sells. Okay. Reasons for UCAD sells: US dollar is in bearish pullback structure. Crude oil is still on a very strong bullish rally, tapped $80 a barrel, bringing a lot more strength to the Canadian dollar. Current structure on USDCAD technically is bearish, with sellers continuously printing new lows and only having pullback phases to collect more sell orders before continuing down. Okay, so far analysis given on GJ, GU, EURUSD, USDCAD, economic events, market sentiment, and what to focus on fundamentally. Now, to keep it very easy, stock market. What do you guys think based on what I just said about the other pairs? And fundamentally, what do you think my US 30 bias is? Before I jump into exact price points for entries, what do you guys think my main US 30 bias is and why? Quick pop quiz in the chat. US 30. What is my US 30 bias? Man said bearish. Abdul Hamid, get out of the chat. Now, why would you fight the Fed? Okay, first of all, never fight the Federal Reserve. You cannot fight the people that are pumping up the markets. I was literally, thank you. Thank you for the person who said bullish for the holiday season, market optimism to squeeze out Q4, right? In the short term, as the US dollar is bearish, we still have a very strong amount of inflow of liquidity in equity markets. The only thing the stock market has done is what I've been showing you guys. Upside move, pullbacks, continuations up. Consolidation zone, breakouts, continuation up. That is all you have seen the stock market do for the last year and a half, 5,000 points above pre-pandemic levels. Right? So, US 30. As long as we maintain current bullish market structure, I do see us having another about where are we at right now, 35,200. I do see another 300 to 400 point squeeze to at least revisit previous highs. Very strong bullish price action. We had this pullback from highs, create this double bottom and retest previous low areas and demand zones, collect a lot more buy order flow. Very strong bullish price action for the time being. On the intraday time frames, we can see strong intraday bullish market structure developing as well. Now, if we maintain above 35K, we're still looking for buys, safe buys above 35,550. 35K is a make or break price point from me. I only see sells on the short term. Short-term sells are below 35K just to simply retest better risk versus reward buy areas before collecting more buyer order flow and continuing up. So the only sell I see would be a short-term scalp if we break back below previous high, break below 35K to retest 34,600 buys. But main bias is buys. You could even just wait for the pullback and collect more buys from 34,600. But 35K, make or break area. We still hold above there and retest, buys. 35,200, create a support, buys. Break above 35,500, buys. Break below 35K, we can anticipate a pullback phase here. Similar to what you've seen in the way the market has been reacting in this higher time frame range. But you can sell that, but I'd still just be waiting for the buys. Okay. Last but not least, gold. Gold is at a very interesting area on the higher time frame here, but still maintaining overall bearish market structure. Because what is the, first of all, is gold a currency? Nobody should get this pop quiz wrong. Is gold a currency pair? If someone says yes, I swear. Gold is a precious metal. It behaves differently and has different fundamental impacting factors compared to a currency pair. Fundamentally, we can see that the potential of Federal Reserve tapering has a large impact on gold. One of the reasons gold has been so bullish during the last year and a half, especially through the pandemic, is one, interest rates being low make it more favorable to hold gold long term. Two, gold is a part of the Federal Reserve's asset purchase program. Three, US dollar weakness and we trade gold against the US dollar. Four, investors hedging inflation rising risks by pooling money into commodities and also like precious metals such as gold. Okay? That interest rates being low, inflation being high, stimulus and so forth has kept gold so bullish. But we're getting more and more signals over the last few months of the Federal Reserve potentially getting closer and closer to tapering, right? If you guys watch my other higher time frame webinars on gold, you will already understand, if you compare to the 2008 crisis and the 2012-2013 correction period where gold enters bearish market structure, that we're having the exact same historical repetition and technical repetition. 2008 financial crisis, economic uncertainty, fear, Federal Reserve stimulus, interest rates being low, inflation rising. Gold peaks all-time highs at that period. Then for an extended period of time, you enter this wedge pattern between this demand zone lows as well as this supply zone from the highs and start to create bearish market structure. Then as you fail to break and sweep those highs, you make your way back down to these demand zone lows. And when the Federal Reserve finally starts to taper stimulus support and rise interest rates, gold enters this bearish market for an extended period of years. Okay? Well, what did we have happen here over the last couple of years? Trade wars, interest rates being low, potential Iran war, pandemic. Inflation high, interest rates low, stimulus active, gold peaked all-time highs. You can also see the same technical repetition of a higher time frame supply zone being created and demand zone. You start to create some bearish market structure, and as the Fed start to give some more signals towards tapering, gold potentially starts to make its way back down to the demand zone lows. Here happens to be the 1680s, 1700s. As soon as the Feds confirm tapering and we get continued U.S. Rebounding economic data, we can expect us to revisit 1680s and start to enter some bearish market structure and corrective structure to potentially come down to the 1400s before continuing up overall. Crazy, eh? The technical and fundamental repetition, what happened in history, the fundamentals behind it, and how it prints the technical charts. Exact same technical movement, exact same price movement, exact same historical fundamental repetition of what the central banks were doing behind the scene. Once the Feds give us more confirms of tapering, gold will make its way down to 1680s. Dollar continues more bullish. We're going to enter a bit of a bearish market on gold as the Feds start to taper the stimulus support and look at rising interest rates, maybe start of 2023, late 2023. Okay? But anyways, that's just higher time frame. That's just higher time frame stuff. This is weekly chart. In terms of intraday analysis, gold is at a very interesting area here. You can see the way gold behaves. You have these very large impulsive movements, and then gold will consolidate for an extended period of time and fail to break significant price points, right? So here you can see very large consolidation zone, very large consolidation zone, very large consolidation zone. Even here, starting to enter a very large consolidation zone as we're collecting orders. But the overall structure, minus these very large pullbacks that happen as new lows are printed, is still bearish. Okay? So when I'm looking at gold on the intraday time frames here, I'm keeping an eye on the higher time frame key levels and raw price action. What I'm essentially going to be looking for is more still on the bearish side. If we retest 1772 and fail to break, continued sells, and sells all the way down to 1751 range lows. I only see potential buys if we come all the way down to that demand zone low and fail to break again, or if we break and retest above 1772. With the US dollar on a macro side still being bullish, even though it's having a bit of a bearish pullback, and the Federal Reserve potentially taking actions and steps towards tapering stimulus support and fighting the rising inflation, investors have already started to price in the bearish moves on gold from the last few FOMCs, right? So if US economic data continues to rebound back to pre-pandemic levels and we do not break back above 1772, we can expect us to make our way back down to these demand zone lows, where then that's going to be a make or break area we're going to have to watch accordingly. Because look at this. Just because gold comes to it, look at this. I want you guys to look at something right here. This and this. And I'm going to delete everything else quickly right now, and we're just going to look at this market structure, right? Okay, so see how gold had an impulsive move and then entered this zone, and then you create this demand zone that you do not break for a period of almost 2 months. You have these extended buy plays that get swept out, that keep breaking previous intraday highs, but do not break this demand zone, but you at least come to revisit this demand zone, and you finally have an impulsive break an extended time period later, right? So that's why you can see something very similar here. Not breaking overall structure, more sell orders being collected, right? So when we're looking at this piece of market structure and this piece of market structure, right now, I would say we're roughly sitting at this area with the potential to at least fill the range back into the demand zone lows to watch reaction. Then we would have to have a clean break below there to continue down. You see how here? The reason why I'm calling potential buys here is because, do you see here? Even when you had this aggressive upside move, very strong seller's price action, you still came down all the way to the demand zone lows and then almost have like a 300 pip bounce before having more sell orders continue down. Same type of ideology here. You have these upside moves that collect sell orders here and don't break the demand zone, right? So I see the potential here that we can at least make our way back down to here. But if we don't break 1750s, we could have a pretty aggressive bounce there again. You can see the same thing here. Look here. Look here. And now look here. Right? Look at how many times you end up coming back down to these demand zone lows and retesting it, but failing to break and having aggressive bounces. Then when you finally have enough sell orders, you get an impulsive drop. Same thing here. Bounce, 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 impulsive drop. Same thing here. Bounce, bounce, bounce. We might make our way down here again, but not initially break. We might do something like this. Then boom, impulsive drop. I have a very safe sell limit I have a very safe sell stop at 1740, just so I don't miss this impulsive drop when it does happen. It usually happens within a day. So I have a very safe sell stop around 1745 and 1740, just as like not a scalp trade, not an intraday trade, more for like a higher time frame trade that even if I'm not there at the chart, when this move does happen again, as long as we don't continue to break these high points, that I don't miss it. You know what I mean? Most likely the sell stop will activate it, right? But anyways, what I do potentially see us at least doing is coming back down to this range low. Does that make sense for everyone? Okay, so that's what I'm looking for based on the key levels in price action is at least we can potentially come to revisit here. But then this is going to be a very key make or break area we have to watch accordingly, where you can still have a pretty aggressive bounce, or we can just melt from here. And I only see otherwise, I'm mainly in a sell bias here. Pull back to 1772 sells, break below sells. I'm only looking for continuation buys if we break and retest above 1772 rejection points. All right. So that's what I potentially see. Just us at least coming, it's just the way gold behaves. You don't want to miss the impulsive moves, but when gold is ranging, it ranges hard for a period of weeks. And that's pretty much what it's been doing. But once you can identify that demand zone low, where all those buy orders have kept being collected, when you finally break that demand zone low while maintaining overall overall bearish market structure has been intact, right? You can see, yes, we might come down here and have another bounce, But eventually, as long as we don't sweep these highs again, we will have that next impulsive move down. And when that impulsive move finally does happen on gold, honestly, through my experience, it's within a day, maybe within a few hours. It's gonna shred that day. When it finally breaks, it shreds. Right? But for the time being, play this range we are in accordingly. All right? So for the time being, play this range we are in accordingly. But anyways, everybody, I just want to keep this pretty short and sweet. We went through the economic events. They're there again on your screen. We went through the key fundamental points that we are focusing on. We are mainly given gold analysis and trade ideas there on gold. We went through GJ analysis, primarily bullish bias. GU trade ideas given. EURUSD done. USDCAD and US30, all the trade ideas given. If you just came to the stream late, don't worry. This is going to be saved in like another 2 minutes. You can just rewatch this. It's probably only 20 to 30 minutes long. All right. So you guys can watch this again, rewatch it, write down the exact trade ideas I'm saying. Depend on me if you want only. Whatever you want. But don't get mad at me if it doesn't play out and you fully depended on me. I'm not a fucking market maker. I'm just a trader and analyst. But all right, everybody, that's it. Thank you for attending the Monday market analysis webinar. Trade ideas given across the board. Make sure to like, subscribe, turn post notifications on, and share it around with everybody. I'll see you guys Wednesday, 7 a.m. Eastern. I'll see you guys Wednesday, 7 a.m. Eastern for the scalping session, all right?